What's up, everybody? This big bank is making not just one bold prediction, but two bold predictions. The first one is for the price of gold in the next 12 months. And the other one I look at as even a bolder prediction than their bold prediction for the price of gold. And that is how many times the Federal Reserve is going to cut rates this year in 2024. As I'm recording this video, we're in May of 2024, and this bank is saying that the Federal Reserve is going to cut rates not once, not twice, not 3 times or 4 times, but 5 times this year in 2024. I'm going to get into it on this video today. Please consider hitting that thumbs up button on the video and let me know your thoughts, your opinions in the comment section below. Is this bank going to be correct about the price of gold in the next 12 months? And are they going to be correct about this prediction for the Federal Reserve cutting rates 5 times in 2024? I will be referencing this article from Kitco News by Ernest Hoffman, and the bank is Citibank. Now, in order for the Federal Reserve to cut rates 5 times in 2024, well, first of all, they're running out of time, but they would have to cut rates for the remaining FOMC meetings. That means they would have to, unless I'm missing something, they would have to cut rates after every single meeting. Their next meeting is June the 12th. Following that is July the 31st, then September the 18th, November the 7th, and December the 18th. So if Citibank is correct, and in my opinion, I'm doubting that they're going to cut rates at all. Maybe they'll cut in September. I don't know. I'm not trying to make any predictions on this video for how many times the Federal Reserve is going to cut rates or for the price of gold. But if Citibank is correct, they would have to cut rates unless they do something out of the norm and cut rates outside of these FOMC meetings. I think in that case, something would really have to break, in my opinion, for them to do that. In fact, I think something would really still have to break for them to cut rates 5 times. Plus, the Federal Reserve was only projecting to do 3 to 4 rate cuts at the beginning of 2024. But time is running out for them to even do that, let alone to do a total of 5. But this article from Kitco News says Fed will cut 5 times this year, driving the price of gold. Now, Citibank is not the first bank to predict $3,000 gold, but Citi is predicting $3,000 gold. Bank of America, I believe a couple years ago, also predicted 3,000 gold. A few other big banks, I do believe, also predicted $3,000 gold. But so far, none of them have been right about that $3,000 gold prediction. Will gold get to $3,000 at some point? Maybe. Again, I'm not here ready to make any of these bold predictions, but this is coming from Citigroup's Max Layton. It says, the current pullback in gold's price is very temporary, as the Federal Reserve will deliver multiple rate cuts which will propel gold's price to $3,000 in the next 12 months, according to Max Layton, global head of Citigroup's commodity research. Now, this article was published on May 24th, 2024. So it's not like this article was in May of 2023 and them predicting 5 rate cuts. This was just yesterday as I'm recording this video. It says, in an interview with Bloomberg TV earlier on Friday, Layton was asked how focused his team is on the role of the dollar in metal markets, including the potential impact of the interest rate path. We certainly think about that, Leighton said. The House view is quite out of consensus. Citi Research's House view: we've got 5 Fed cuts this year, lowering rates into the end of the year, early next year, and that's certainly going to be, we think, the backbone of the next move higher in gold. Leighton said Citi believes gold is the asset most leveraged to that kind of move in interest rates. We've got it going to $3,000 over the next 12 months, he said. When asked about the market only fully pricing in 1 rate cut this year and where that would leave gold prices, Leighton acknowledged this would necessarily rein in their projections. Certainly, it would make us less bullish, he said, but the underlying drivers of gold are very physical at the moment. So we feel like there's support for these gold prices. Obviously, gold's broken the relationship with real rates of late, and that's all been about the colossal Chinese retail demand. I mean, off the charts. I've never seen China on the bid at the highs and the dollar notional that they're putting into gold. We ballpark that it's roughly 40 to 50% of what would have otherwise gone into property, he added. It's a big shift from property spending into gold in retail in China. It mopped up about 2/3 of China's mine supply in the last 3 or 4 months, really absorbing all the mine supply. That's plus the central bank demand, and there's nothing left for the jewelry market. Asked whether Citi sees this outsized Chinese demand continuing at current levels, Leighton said that was the most worrisome unknown in their view. That's the biggest downside risk to gold for us, he said. Ultimately, the government controls the quotas on the imports. The quotas aren't published, and they could dry up if the government becomes unhappy with the transfer of wealth from perhaps consumption and retail into physical gold. Leighton added that despite gold's strong performance year to date, the attention he's been seeing in the commodity space has been going to another metal. I would say overall, the action in commodities has been almost 95 to 99% copper, he said. From a client active perspective, from what I hear about and see, it's not so much been in gold. Now, I believe just a couple of days ago, copper hit, I believe its all-time high at just over $5 per pound. I want to say it was like $5.20 per pound. Not exactly sure if that was the all-time high and exactly what copper hit, but I believe it was somewhere around $5.20 per pound. Moving forward, however, Leighton expects that the interest will shift towards the yellow metal. I think there's a lot of room for gold, he said. Frankly, many people, including ourselves, were scratching our heads as to what the new drivers were, and now they've become clear that it's China. I think we're going to get a lot more interest in gold because people can get their heads around it. Then the article says in April, Citi updated their gold price forecast to $3,000 per ounce by 2025, making them among the most bullish in the industry. In the summer of 2019, I was in your studio calling for $2,000 an ounce as base case over the next 12 months. Akash Dashi, I hope I'm pronouncing that name right, Citi North America's head of commodities research, said during an interview with Yahoo Finance on April 16th, we now think $3,000 an ounce gold is in play over the next year or so. Dashi said investor demand is the big driver that will make this come to pass. We think financial demand for gold is only catching up to what is strong physical demand, he said, referring to reports of burgeoning bar and coin sales. That is a global trend. We've seen bar and coin demand surge since the pandemic. It's now above pre-COVID trend, and that we think represents a strong alternative fiat demand story. Separately, we see the official sector, central banks in the emerging markets in particular, to buy a record amount of gold over the last several years, including over 1,000 tons in 2024, which would be the third highest since 1967, he said. We think this physical demand is structural. It is strong, it is driven by a host of factors, and financial demand for gold is only catching up to that. I would note that if there's a U.S. recession, which is not priced by the markets right now, that could also be a further kicker towards 3,000 an ounce gold over the next 6 to 12 months, Doshi added. Like I said, I believe, in my opinion, $3,000 an ounce gold is sort of a bold prediction, but that's a prediction that many banks have made before, including, I do believe, Bank of America, and I believe Citi also predicted $3,000 an ounce gold previously as well. But the much more bold prediction, in my opinion, is the 5 rate cuts in 2024. Do you think they are going to be right about those 5 rate cuts? I just did a poll yesterday on this channel in my community section asking you, when do you think the first rate cut will come? And the poll results, this poll is in the community section of my channel. This was about 20 hours ago with about 114 votes. Not many people chose to participate in this poll, but the poll question was, when do you think the Fed is likely to cut rates for the first time? 52% of you said, out of 114 votes, September 2024 as a political move. 31% said sometime in 2025. 8% said November of 2024. 7% said when the rate of inflation is down to 2%, and 3% said either June or July 2024. According to the CME Group FedWatch tool, for the FOMC meeting that concludes on June the 12th, 2024, they are saying that the likelihood for that meeting is a 99.1% possibility that rates will remain unchanged. In July of 2024, they are saying that the likelihood is a 88.9% possibility that rates will likely remain unchanged. Then in September, it's about a 50-50% toss-up between cutting by 0.25% and leaving rates unchanged. And then in November as well as December, it's pretty close to 50-50 for those 2 months as well. But let me know your thoughts in the comment section below. Do you think the commodities research group over there at Citibank has lost their marbles, or do you agree with them on 5 possible rate cuts still this year in 2024? And what about their prediction of $3,000 gold by sometime in 2025? They didn't really pinpoint their prediction to any month in 2025. They're just saying by 2025. But like I said earlier in this video, there has been multiple predictions of $3,000 gold by many, or at least a couple different big banks since 2020. As for me, I am very much up in the air if they're even going to do 1 rate cut this year in 2024, let alone doing 5 rate cuts this year in 2024. But then again, I don't know. It's all anybody's guess. It's all up for speculation because none of us know what Jerome Powell is going to do, how many cuts he's going to do, if he's going to do any cuts this year in 2024. As always, nothing in this video or any of my videos is financial advice. Please do your own research, your own due diligence, and come to your own conclusions. As always, I thank everybody for taking time out of your day to watch this video. I do appreciate your time. Let me know your thoughts in the comment section below about not just the one, but the two projections from Citibank Commodity Research. What do you think about their projections? 5 rate cuts in 2024, $3,000 gold by 2025. Thanks everybody for watching. Like, comment, subscribe, share, and I'll talk to everybody on my next video. Thanks a lot, everyone.